Elaine Kub is our marketing analyst this week. On Monday, the USDA will release its latest supply and demand estimates. Possibly in anticipation, corn and especially soybeans have put together strong performances this week, at least as of Thursday morning. We talked with Elaine Friday morning about the South American soybean harvest, the trade range for corn, and the February crop report. Soybeans have had an extremely strong week, unless they close negative today. Right. But what's the reason, do you think?
Well, and this is coming out of the blue. For a long time, these markets have been very, very neutral, very sideways. Coming up now, it's sort of interesting to see this confirm, this idea that we're going to have normal seasonal markets and have some sort of a rally into the spring. That's true for both corn and beans, and probably led by the new crop, just because that's, when these crops are going to face the most risk. We've also got a report coming up on Monday. Perhaps we're seeing some speculative interest based on that. This idea that the old crop supply and demand here in the United States is still a very tight situation. So a lot of these things are happening and nothing has happened to counteract that. For instance, the Chinese buyers are on their New Year's holiday, so you wonder that this might be susceptible to some sort of correction very suddenly if they come back from their holiday and cancel some sales.
Well, and with what we've seen in beans so far, what's the argument for maybe holding and trying to get a little bit more price?
I cannot come up with any arguments to really hold. If you're still holding old crop beans, you're either very near that $13 cash level or perhaps even at it or above it. So this would be a price if you are still holding on to old crop beans and probably looking at some cash needs going forward. This would be an excellent opportunity to get rid of that risk because that market is very susceptible to correction, particularly as the South American crop starts being harvested.
When does that South American crop start to weigh on the market?
Well, it's already getting started, but there are certain areas that are still filling up the pods and somewhat vulnerable to weather still, so you might still see some weather activity, and that might have been part of the reason for the rally this past week too, but if it was, I think that's an overdone argument. So through the next couple of months, we're going to continue to see harvest reports, confirmation of large yields probably, and then into that April-May timeframe, now you're looking at the crush of the infrastructure that they have there to ship it out of their country.
We've also seen corn with some activity, which is unusual for corn. It's back above $4 on a cash basis. Or on the cash market, what would you think that it might go to here?
For the new crop market, I think my goal would be $4.75, and you're really only about 15 cents away from that. For the old crop market, it's hanging around that $4.40 level, so the cash price you might get $4.30, somewhere between $4.20 and $4.30. And again, if you're looking at a situation of you haven't sold very much, you've got a lot of risk on the books, and you're going to need some cash coming forward, I think this is a reasonable time to sell because I don't have a very optimistic look for it to go much higher. I don't think we're going to be in one of those years where we're going to have another streak up to $7 or $6 or probably not even see $5. So I think you have to have very modest goals, and this may be pretty close to where you want to be selling.
How would you characterize the demand market for corn between exports, ethanol, and livestock?
I think it has some chances for a little more bullish tweaks coming into the supply and demand report. It has some chances for some bullish anticipation in the baseline projections that USDA will come out later this month looking at new crop acreage. So there are some chances for that supply and demand situation to be tweaked, but I don't think that we're looking at any major changes.
We're probably at the point in time where the private firms are trying to stiffen up their acres for 2014. Do you have an impression of what we might see here in case some farmers are trying to gamble back and forth?
Well, I get the sense that the calls for lots of higher bean acres are probably overdone. You see some estimates that there are going to be 6% more bean acres in 2014. And some of that was based on some reports from seed salesmen in November did book more soybean sales, particularly in the western corn belt. But I think in the heart of the corn belt, it's still going to be the status quo where you just plant as much corn as you possibly can because they have a different yield ratio to work with out there. So I don't really anticipate seeing a lot of extra bean acres, and that means that you are in a situation where beans will have to pay more, or they could rebuild that price ratio and get a more exciting price.
Short-term outlook for basis in corn and soybeans?
It's been very quiet throughout the year. I think seasonally we would expect it to get a little bit stronger going into the spring.
Monday, the USDA releases its reports for supply and demand. Should we expect any kinds of surprises with those numbers?
I don't think any major surprises, but I guess that's why they call them surprises, right? But I don't think, I mean, there, like I said, there could be some tweaks, some increase in the corn exports, some bullish tweaks to the soybeans just because the domestic crush has continued to be quite strong and the export pace has been quite strong. But I don't think any major surprises.
And finally, you look towards that 2014 crop that will go in the ground in a few months here. How much of that crop, either corn or beans, do you think is already contracted, is already sold?
I mean, close to zero, I would imagine. I mean, you look at your projections for making money, these prices that the market is offering are not profitable. Mike Duffy at Iowa State has kind of put out the benchmark profitability levels at $4.29 for corn after beans, $11.13 for soybeans after corn, $4.97 for corn after corn, so if you have a very high input cost situation. So that means your cost of production is already basically matching the prices that anybody's going to pay you at harvest, so you're really not in a very great situation at this point in time.